us from Brisbane. And thank you so much, Delton, for getting up early with, as I said, the Global Carbon Reward Initiative.
Thanks, David. Pleasure to be here. It's a beautiful morning, dark, no sun, but it's still morning.
And then one shout out, we wanted to thank the Solutions Journalism Network, and particularly Farah Warner, who have had a great cohort going around climate solutions journalism, of which we've been a part. And for our project, we took on carbon pricing because it's seen as a climate solution. So with a little bit of support from the Solutions Journalism Network, we've been digging into carbon pricing. So thanks to SJN and Farah, and then thanks to all of you. And as Zulema said at the top, do introduce yourself. I think people are. I haven't looked at the chat, but the question for the day actually is, how are you seeing carbon pricing show up in your work, in deals, in the balance sheets, in business models, and how is it showing up in the work you're doing, or how do you expect it to show up? So let us know that, and we'll pull some of that into the Q&A. So with that, Amy, let's bring Paula up, right?
Yeah, come on up, Paula.
Paula,
Okay.
The leadoff question: what is the significance that carbon prices, at least on the European markets, have crossed that $100 a ton threshold? What does it mean?
Well, from the personal point of view, as someone who helped start the Chicago Climate Exchange, set up the first carbon market in China in 2008, from a personal point of view, $100 a ton, I should be popping champagne just to say, wow, the world has recognized that there's this very reasonably high cost of inaction, which is what that indicates, that this is a wake-up call. People see that there's a high cost to inaction per ton, and that the only way to make that cost visible is to price the carbon in some transparent mechanism like a carbon market. And so beyond my personal champagne, it's not a celebration that climate change is more and more worrisome, and that there are more and more people, in the stands clamoring for action from the team on the ground. So that's not too positive. But I think what it means is that the markets have matured, that the EU ETS primarily has sorted out its oversupply. There's confidence in the markets that the allowances being traded are actually representing some kind of environmental benefit. You have a lot of activity in the voluntary carbon market world, integration potentially between the voluntary and the compliance. So I think the $100 a ton represents primarily a wakening up of the world, as Amy said, to the financial side, to the financial risks and the financial opportunities inherent in climate change, addressing it, as well as the maturity of the markets and the operational structure of the markets. And we all should take our hats off to the Europeans, because I hate to say it, but the United States invented cap and trade during the Clean Air Act to address SO2, turned its back on it, let the Europeans take it on, kicked out, did not pick up the Kyoto Protocol. And if the Kyoto Protocol, God forbid, had ever been advanced, not that it didn't have problems, we'd probably have a lot more control over climate change today, I would argue. My fact-checking nature requires me to say that even though the European market, as you say, the most advanced has crossed that $100 threshold by a lot, I think by 110 or 15 by now, that the global market weighted average for climate across the markets is still at 28, and the markets are only a quarter or less than a quarter of the emissions. So there's still a long way to go, as you say, but at least we're on the road. And the other thing you mentioned that I want to pick up on is it's not just credits and offsets and whatnot that people as a signal. There's something broader about what a price on carbon means. For example, CDP tracks the internal price that corporations use to sort of do their own planning. And how is that trending? Yeah, so for companies that are outside of any kind of compliance market, they could do nothing. But we've seen a tremendous increase from something, I think it was 192 companies in 2018 to 260 today that are either using or internal carbon price or plan to. And what they use it for is a planning tool. Either they know that at some point their operations may fall under a mandatory reduction regime. So they figure, well, we better plan for that additional cost. So let's see how that price works in our internal operations now. Or they may use the internal carbon price to tithe each other, each department. They put competition among departments, and they say your budget is $1,000, but there's a carbon price attached, so you really only have $800 to work with. So figure out how you're going to get back to 1,000 by cutting your carbon consumption. And so there are lots of different ways it's being used. But interestingly, there's a hotel company that has no obligation, probably never will come under a carbon reduction plan, but has voluntarily set up a pilot program using $100 a ton based on the market signal to sort of figure out where they might stand if they were ever to become regulated. And that is, I think, because they're using the carbon price as a surrogate for fuel consumption, for good management overall, for environmental ethics. So the price has a financial and non-financial use, but it's an exploding topic. The other thing, just to not to monopolize, but to pick up on your point, I'd love to return later, this idea of the average price across markets. We should be accelerating linkage of these markets. There's no reason for them to be like, spots around the world, separate and unequal. We need to link them up. And that, I think, is the next big challenge.
Paula, that you're segueing right into our next question. And we did want to talk a little bit about that. How is that going to come about? A little bit of that is happening now. And I mean, back to corporate internal prices for a moment. If we think market prices are all over the map, the internal prices that corporations are using range from like $1 to $1,600 on the other end. And I mean, they tend to, cluster around a median, but how do those things start to converge a little bit? And how do these markets start to come together? As you just mentioned, they will.
Well, I mean, the 1,600 is an outlier and probably is related to a test of what if we emitted 1,000 tons and we wanted to use green hydrogen to mitigate it, it might cost 1,600 a ton. There's a price per ton relative to an abatement mechanism. But that being said, we linked commodities markets, we linked stock exchanges, we didn't wait around for perfection, and we did it. And, at CCX, we linked CCX with the EU ETS in about 20 seconds and moved tons from one jurisdiction to the other. So I think what's holding it back is a kind of a policy rubric and a legitimate need to have legitimate markets. But we're kind of, on the one hand, plunging ahead, and on the other hand, very tentative. And I think we just need a bunch of early adopters to say, we're going to try it. We're going to have universal baselines, 20 companies step up, and we're going to act as if we were all in the same market. Let's see what happens.
Well, that's a perfect segue. Thank you, Paula. That's a perfect segue to Edwin Datson at Estabrook Carbon, because I think you're seeing and betting a little bit on that convergence coming to pass. And maybe just tell us what you're seeing and what Estabrook is.
I mean, we are investing in both the allowances and the voluntary offset markets. I think Paul is exactly right. There's going to be lots of small and imperfect little bits of convergence that happen, and I think help corporations start to feel that the prices that they're seeing in their compliance markets are a lot closer to, quote, the sort of real price that they will going to need to pay at some point in the future than, a voluntary generic VCS price of sort of $4 or something like that. So that is happening through a bunch of different mechanisms. I mean, one, you are starting to see some ETS schemes allowing some high quality offsets in. So California allows that to a small degree. So you start to see a sort of translation and an exchange rate between the offsets and the allowances, which is good to see. Sorry, David, you were going to jump in.
Well, I'm just going to say we've done what always happens in carbon conversations and jumped straight into the weeds. And I want to just take you up one level, which is this this phenomena which we called out this week, and thanks to many of you for pointing it out to us, the inversion of the supply and demand, which is what has been driving the prices up, both in Europe and then also in California, and then ReGen is sort of the Northeast compact, and just explain to us how supply and demand works and how significant this flip is.
So with apologies for sort of going back to the basics for people who might not have heard it before, the exchange trade mechanism, all that is basically saying we will define the total amount of pollution we allow in our country, crudely, and we'll give out allowances that give you a license to pollute that amount. And each year, the way we will guarantee that it comes down is by giving out or auctioning fewer every year. And typically what happens with when a scheme launches is that the focus is very much on getting the mechanics of the scheme to work in the early years. So the whole process of who is audited, making sure that the process of the auctions or allocations work smoothly, making sure that the sort of netting off of those at the end of the year, the giving out of fines, the giving, all of that process works. That they sort of don't want a situation where in the very first year, there's some massive imbalance and the price goes ballistic, and the next day, all the power stations shut down. That's worst case. So they tend to issue net long, and also, particularly in markets like California, once the various lobbying things start to kick in, that tends to also mean that there are more exemptions or more carve-outs, and tends to net long. What has happened, especially in Europe, but also in California, is you got to the point where, because every year that relentless reduction of allowances kicks in, at a certain point, companies start realizing that the fundamental supply versus the fundamental starts to flip. And because because you can hold these things over time, you don't have to use them in the year that you buy them. It doesn't need to be the year that the actual current year supply demand flips. It needs to be the year when people start to think that that's coming. Once you start to do that, people start to stockpile, and then everyone starts to grab for everything at the same time. And then that sort of brings that supply demand point further forward.
And you're saying that flip happened in Europe a year or two ago, and that you can see the price start to peak up. And then in California, it's coming, but as you say, the expectation kind of runs in front of the actual regulation.
Yeah, I mean, I think there are probably people on this call with more sophisticated models than us on that. I would argue that sort of in Europe we are past the fundamental sort of supply demand shift. In California, we must be very close. I think our modeling suggests it's kind of this year or next.
Okay, so just again, at the risk of being basic, who are the buyers and who are the sellers? And are the sellers the supply that's in short supply? Are they actually getting more money now? Is there more money going to carbon projects?
Yes. So the only seller is the government. It's sort of at a primary level. The only seller is the government. They're the ones who are issuing these licenses. And what they have is basically a reduction factor, which is reducing the number of allowances they give out every year. And it's sort of around 4 or 5% or something, depending on different schemes have different ratios. So at a very fundamental level, there is only one provider of this product into the market, which is the legitimate government of that country. So yes, to the extent that you're giving out, if you take an EU example, you're giving out sort of 3 or 4% less in 22 compared to 21, but you're getting 100 euros for it instead of 30 euros, you're getting a lot more money.
Okay, no, I was actually saying if there, maybe I have this wrong, but that there's somebody out there doing forest conservation or doing soil, regenerative ag or even carbon capture that is creating a carbon credit that they're trying to get paid for.
So that's going to be the supply demand for the voluntary market, not the allowances market.
I see.
So in general, on average, the allowances don't let you use offsets into that.
Okay, so now we're at another level of nuance that I obviously need more education on. But then take it just to the logical conclusion, which is, if for a fund, obviously buy low and sell high, bet on interoperability of markets. I mean, how does this become how do carbon funds become a mechanism in this marketplace?
So one of the things that we do, I guess, is provide liquidity into that marketplace. So we are competing with the companies that have to, by law, buy these allowances to offset their own emissions. We obviously have no emissions of our own. So by buying and holding, we exacerbate that supply-demand imbalance and help drive the price up. So I think the sort of important point is the capital markets as a signaling mechanism, right? On one hand, you could say the sort of pessimistic view would say, as you were saying earlier, only 15 to 20% of global emissions are actually covered by an emissions trading scheme, and the weighted average price is pretty low, so there's no signaling benefit to it. I think what we're saying, which we're showing, is that for a lot of corporations around the world, they're seeing the EU price go from 7 in 2017 to 100 and something today, and realizing that that is the inevitable direction that will happen, and that the scope and the reduction ratios of all of these different schemes across the planet will only get more aggressive. And I think, as we've seen with sort of COVID stuff, anytime you're facing an exponential process, if you can persuade people to act, even in an imperfect way, sooner, that's massively beneficial to the planet overall.
Great. So let's move on to Emmanuel. I'm just mindful of the time here. Emmanuel, we had a lovely long chat the other day, you and David and I and Rhea. Tell us, how is carbon pricing pushing industries to tip to green? Like there was the example of steel in Europe, for example.
Yes, so basically, if you want to decarbonize the economy or decarbonize the energy that an economy is using, you have four main mechanisms, right? So the one that I prefer is, of course, breakthrough technology, and you create a deflationary system with innovators and green jobs and all this. That's one mechanism. Another one is green stimulus, subsidies to buy an EV or things like this. You can squeeze fossil fuels out through taxes or supply, and we have seen some form of that in the last part of last year, and you have carbon credits. So, and of course, those four phenomena, those four tools combined would probably help. And it's true that today in Europe, you see some form of this at play with the carbon at $100 a ton. So green steel. So if you're producing steel in Europe, you're going, and it's not green steel, it's traditional steel, let's say, you're probably going to be squeezed out because you're going to start having to pay penalties on your carbon emissions more and more, and offsetting that will be more and more expensive and more difficult. So there will be literally let's call it a brown or dark premium added to your product, and at the same time that will make the green premium that you have on a ton of green steel more palatable for the end user. So you see really that market, that the carbon markets being efficient in some transformation. So you need all the other levels, the technology breakthroughs and all this. But you see that happening, at least in some industries. That's not true for everything, but that may very well happen very quickly for the steel industry, for instance, in Europe, and a few other fertilizers may be also another example.
So you're saying the green premium, which people talk about as the extra you have to pay for the low carbon, is being partly mitigated by the carbon credits. It's also partly mitigated by just falling costs, right? And solar, as the classic example. Is there still a significant green premium, and how's that playing out? And is $100 a ton enough to flip the equation?
Right now, yes, because you have to also to take into account the demand, right? So you're producing a ton of steel today in Europe, and it's green steel. You're doing that with green hydrogen, assuming that you have a very cheap renewable source to produce that green hydrogen, and so on and so forth. So your green premium on that ton of green steel is not that high, say 20-25% extra cost. On the other hand, so if you look at the demand, that still is going to go into construction, into white goods, or into cars, right? So you're now the CEO of a very large auto OEM in Europe. So you say, okay, should I buy a ton of brown or dark steel for my cars, or should I buy that new green steel that is a bit more expensive? And the calculation that they all make is very simple. Say, okay, what is the extra cost on a car? 300 euros, 250. So I can absorb this as an automaker, and would probably even push it to my customers, that they would be happy to pay that very little premium for green steel. Because if I take the dark steel, I will have to pay for the emissions. That's going to be bad for my carbon footprint, and I will never be able to be competitive and say that my car is greener than the car of my competitor. So you see that virtuous circle progressively getting organized in some industries, and the car industry in Europe is a perfect example. You see a similar phenomenon in batteries and other things. So yes, that having a high price, or higher than everybody would have thought at this stage, of the ton of carbon is helping definitely, and going to accelerate that transition.
So General Atlantic has set up this BeyondNetZero project, recruited yourself and some other quite luminary folks. What are you looking for?
Well, typically, so we are looking at first at technology breakthroughs, right? So helping entrepreneurs who are really helping bringing to the market climate technologies at scale, mostly to decarbonize energy, food, and other industries. So we would not definitely focus first on the other factors like green stimulus or the ton of carbon, but definitely they help when you assess the long-term business case of a company, and all these again is probably helping accelerate or smoothen the transition towards a greener economy.
Well, so you're saying it helps because the company you invest in might be able to be a decarbonization technology, but then the demand is going to come from the corporations, as Paula was saying, who might have their own internal prices, or they might be under a compliance market, as Edwin was talking about, that they need to decarbonize. So that's driving demand.
And demand is fundamental, as in any industrial revolution. You have to look at where the demand is going. I think the best example is that very big brand beer from the Netherlands that is mandating that its entire value chain to make that beer is completely green. So the suppliers of the suppliers and the suppliers of the suppliers have to be green. So up to the fertilizers that you're going to use for the cereals that will go into that beer. So now, if I'm not an expert in that market, but you like
you're not an expert on beer?
No, well, drinking it, but not making it, maybe. So you look at the price of a bottle of beer and the cost of that bottle of beer, all included with the marketing, the water, the supply chain, and everything. The fertilizers that will help grow the cereals is a fraction of a fraction. So if that fertilizers comes with a huge green premium, nobody cares, because that demand will help. So you have those two phenomena at play. One, the price of carbon helping some transitions and making that green premium more palatable for the industries that are going to consume those products, and at the same time, a lot of companies which are in the endeavor of reducing their carbon footprint and looking at their supply chain and up into their value chain and figuring out where that green premium is not really relevant, or at least that the trade they have to make between being able to say that their product is completely green and sustainable, and they will attract more consumers and get better investors and more quality on their share price versus saving a few pennies on the supply of some products. So those two phenomena are really happening. And it's true that in Europe it's happening a bit faster than anywhere else right now.
Great, thank you. I want to. I'm going to prep you, Emmanuel. Don't answer now, but I'm going to ask you about scope 4 later. But that's our bonus. That's our bonus. Let's jump to Gregory Landua, and we'll and stick on the supply and demand, Gregory, and we'll finally, I think, get to my question about regenerative ag and forest carbon and whatnot, because you are in touch with both the supply of and just tell us how you're seeing that, and then we'll get to the blockchain part of it later. But just tell us how you're seeing the money flow through as prices rise.
Yeah, well, I mean, there's a huge amount of demand. There's also, I would say, some significant issues around bringing high quality supply online, and that's, I think, in some way part of, the demand for high quality nature-based credits in the voluntary markets. I'll be speaking about voluntary markets. By and large, that's where I focus. A large part of that is due to the expense of getting carbon credits that are carbon offsets that meet the standards. So that's created, just in our, we run a little bit of an over-the-counter trading desk as we're building our platform up to have a decentralized exchange for these assets. And just, in our day-to-day, we've seen carbon, voluntary carbon credits for quality nature-based solutions move from something like, $7 for sort of like a premium voluntary carbon credit up to like 15 or 16 over the last 2 quarters. So that's a significant shift, right? And a large part of that, I think, in no small part due to the speed at which carbon credits are being purchased and retired off of the incumbent registry systems like Vera and turned into tokenized credits that are living on the blockchain. And so that's certainly a really large part of, I think, driving the voluntary demand at the moment. But it isn't the only thing. There's also a huge amount of corporate desire to get in and stockpile or to make sure that they have enough to cover. So that's all, I think, at play. And what we're starting to see is a strong desire from many different participants in this sort of emerging market. Everyone from sort of, you might say, traditional ESG-oriented corporates to Bitcoin mining firms and pools to proof of stake, to the whole spectrum of blockchain operators and people who are operating in the emerging crypto economy. Everyone wants forward contracts. Everybody wants to be able to pre-purchase their carbon and know that they have it taken care of, because they're all feeling the squeeze. And frankly, they're all looking at it as a potential, asset and upside to hedge their more complex treasury management, approaches and strategies.
Hey, Greg, let's back up a little bit. When you launched ReGen, and you have a sustainable agriculture background, but when you launched ReGen, you saw an opportunity for some of this blockchain, I don't even think we were calling it Web3 quite yet, sort of technology to marry with crypto. And now we're talking about, like, from DeFi, decentralized finance, to refi, regenerative finance. Can you just talk a little bit about that opportunity, the coming together of these two things, which is fairly new, and it's a wild and woolly world out there with all sorts of crazy projects, and how blockchain, which has its skeptics, can can play in this carbon market world in helping to, enforce some of these standards and really, embed the contracts and the rules in the actual asset. It's a lot
Yeah.
of
Well, exactly. I mean, I think the reason why over the last, let's just say over the last 6 months, there's been an explosion of interest at this intersection between blockchain, Web3, crypto, whatever we want to call it, and climate carbon finance. It's just a huge Cambrian explosion of interest and new startup projects. And what's driving that, I would say, there's 3 primary elements. The first element is that intrinsically, using distributed ledger technology broadly, however you may construe that, whether it's proof of stake or a proof of authority consortium like corporate chain or something, allows you to guarantee certain unique data attributes for a digital asset that are not spoofable. And essentially that creates the conditions to know who is saying what about where, using what data and what models or methodologies, and who else has audited it and tagged it as something that has been sort of verified or certified. And so it creates a composable environment for these types of assets, which are kind of ineffable, right? Like, we're not talking about trading grain, right? We're talking about trading tons of, gas. It requires sort of a verification apparatus, which up until now has been held in a sort of centralized, bureaucratic, slow, expensive, ineffective, highly prone to fraud kind of circumstance. And it transforms that into something in which don't trust, verify is the bottom line rule of everything that everybody's doing, which is blockchain. Everything is don't trust, verify. The entire apparatus is built to create efficient markets and mechanisms that allow people to curate and govern, mint and exchange assets in sort of an environment which is don't trust, verify. So I think the interest to be able to build infrastructure that allows natively for the stakeholders who need to participate in monitoring and verifying a claim, issuing an asset, and creating the contractual agreements about how that asset is going to live in the marketplace. Those are all tools that we have available to us in this emerging blockchain regenerative finance ecosystem. So it's enormously exciting. And I think a lot of people are just jumping both feet in to help innovate and drive that. And from a variety of different, there's a huge amount of interest across the board in innovating. So I'll pause there and, Amy and David, see if there's, you want me to go in any particular direction from that.
Let's stick around, Gregory, and we do want to come back to it. And like I said, blockchain is the easy case because it's still fundamentally working on the same kind of offsets and credits and compliance. Delton Chen, who's with us, as I say, from Brisbane, and who came to our attention, as he possibly did to many of yours, through a book that kind of became the Bible for a while in the climate crowd, called The Ministry for the Future by Kim Stanley Robinson. And that book contains a big idea to finance this huge decarbonization effort. That idea in the book is based on Delton's work. So welcome, Delton. Many of the mechanisms that everybody else has been describing, you say are obviously helpful, but not sufficient. Tell us what's next.
Hi, David. Thanks. Yes, we're telling a somewhat different story. We're not removing all the hard work that everyone's made in this area of climate mitigation through carbon pricing, but we're saying we really need to have a fundamental relook at the very notion of a market failure in carbon. And the way we've done that is to recontextualize carbon pricing by looking at the social agreements around different ways to price carbon. So I think everyone will agree that if we're going to solve the climate crisis, we need the economics and the carbon pricing to go to speed and scale, which means a global effect, a global price. And this is very difficult to achieve with existing markets. We're gradually getting there in steps. However, speed and scale means we have a deadline. Now, my analysis or the reanalysis of carbon pricing says that there is actually a matrix of possible prices. And I mean different types of prices. So we know we have carbon tax, that's one type. We've got cap and trade, that's another type. There are subsidies like the 45Q in the US, that's another type. And the matrix approach says, look, why don't we think about the carrots and the sticks together? And we claim we're missing a carrot, we call a global carbon reward. So the global carbon reward is a carrot that could be globally introduced with a carbon currency. And hence, this is the story that Kim Stanley Robinson was referring to as carbon coin. And I think the next question is probably going to be something about central banks. Am I right, David?
Sure, go for it.
Sure, thanks. So carbon quantitative easing, that's a new term that is floating around in various discussions. So what's that? Well, what we're saying is that the carbon currency has this unique and special possibility that because it's a currency and a carrot, we can potentially introduce it globally and support the price with the help of central banks. So there is another discussion going on in a parallel universe, if you like, about what should central banks be doing. There's green quantitative easing and a few other ideas being floated. I claim, and we claim that the natural way to use central banks is not with buying bonds, green bonds or climate bonds. It's to trade and support the value of a new parallel currency that is not used to buy things. It's only a store of value to provide that carrot price signal. So carbon quantitative easing is this notion that what we really should be thinking about is having all the world's central banks providing a price guarantee, a rising floor price for a rising carrot, if you like. And the idea is that this might be the special price signal we need to get us over the finishing line to the 1.5, 2 degree goals of the Paris Climate Agreement.
Let me try and see if I get this, and pardon me if I mess up the nuances, but essentially the central banks would set this price for this new currency that would then be additive to companies and others who are removing carbon or avoiding carbon, and they would thus get rewarded for doing the right thing on carbon at no cost to taxpayers themselves or anybody else. Don't economists say there's no such thing as a free lunch, and are they wrong or right?
They're definitely right, David. There is no such thing as a free lunch. However, a couple quick points. We need a new institution to determine the price. The central banks are only providing some monetary services in currency trading. When they provide the guarantee, they won't actually have to do money printing or very little, because the guarantee will create an investment vehicle out of this currency. And so the private sector will want to buy it because it has an appreciating value. And that's how we attract the private wealth directly into the carbon currency, which is coupled to mitigated carbon through the unit of account. So we have a very strong administrative coupling between the supply of the currency and what's actually happening in the world with reducing emissions, and also, very importantly, taking carbon out of the atmosphere. So I'll just make a point on this. Everybody's discussing net zero. A lot of promises, but if you think of net zero globally, what does that mean? It means we have to take a huge amount of carbon out of the atmosphere, because that's probably the only way we'll get there. And who's going to pay for it? It's hard to charge people taxes to force them to take carbon out of the atmosphere, because it's not really their carbon. So we haven't figured out how we're going to afford to pay for this approximately $100 trillion bill to take approximately 1,000 gigatons of carbon out of the atmosphere. So this is why we need to think again about what we're missing in terms of the economics at the macro level.
Can I offer a different?
Beautiful. Yeah.
Just not for the sake of challenging, but just to offer a different point of view here. So we are, as we said, we're all happy that to see $100 per ton in Europe, and that's fantastic, great. So, but it's difficult to believe that one day we will have a universal planetary connected carbon market. I mean, the European market is not even covering all the industries. The Chinese system is completely different, and it's very difficult to imagine that one day we will have a US carbon market. So it's almost impossible to apprehend. So, and this is one. So and look at how painful the conversations and are at every COP every year, and look at how painful it is to align central banks on are we going to raise interest rates or not. So not going to happen, at least on carbon. No, one. Second idea. With carbon, if you're the CEO of a business, you want to reduce, to do a good job from the ESG standpoint. Well, carbon is a good indicator, but it's one variable probably among 20 or 25. So because you can be the best in the world or the best in your industry on that variable, but what about your diversity and inclusion and the gender pay gap and the mental health of your employees and so on and so forth? So ESG is usually something between 20 and 25 variables, and carbon is one. And what about your water consumption, circularity, and so on and so forth? So putting a price on carbon is very useful. It's advancing the agenda, but it doesn't make it. And the proof of that is that you see the big capital allocators or the asset managers, like the BlackRocks and the Fidelities and the Vanguards, when you read their paper, they're looking much broader than this, right? So they start pushing, and they're using companies like Measurable, Persephone, Clarity AI, and things like this to give them an analysis of their portfolio on something on carbon, but on also much broader things. So for me, and back to Greg's point, crypto will probably accelerate that idea of, well, maybe carbon is not the only solution. That's great. We will have it originally in something that will help accelerate some of the transition, but that's not the magic wand we need.
We're now open. It's now open season. So if other folks have thoughts on that, or just other mechanisms and ways in which the rising price of carbon is showing up in deals or in other parts of your work. Are there other thoughts from the panel about what you've heard from each other? And then we'll also pull in some.
Yeah, I have a couple of thoughts, which I think is maybe useful, which is to just note that there's a bunch of experiments taking place in the crypto world in which, sort of people, okay, so take a step back. What's actually going on in crypto? What's actually going on in crypto is there are experiments in the social construction of value independent of state-based monetary systems. That's what's really going on. And there's different approaches to that. There's, Bitcoin, or, there's Ethereum, there's different people who are saying, we're going to create consensus that something is valuable for some reason, maybe perhaps some reason other than the long-term bet that the US military will continue to exert global hegemony over petroleum and force everybody to use US dollars in a petrodollar economy. So people are placing bets that there could be an alternative monetary system to that one. So taking a step back, what does that mean about something like what Delton is talking about, which is that people fundamentally socially construct value. We're agreeing, it's like a collective hallucination that these abstractions are valuable to everybody, and we all agree upon that. So there are just a myriad of different experiments in which people are saying, we're going to collectively mint value and assign it for something like a regenerative outcome, whether it's, agroforestry or soil, or people are doing it for social benefits. And I point that out not because I'm particularly personally attached, whether or not this is sort of ends up happening through the existing institutions or through sort of new digital institutions, but just to say there's sort of this Cambrian explosion of experimentation, which we can learn from and pick and choose tools that I actually think is going to create conditions that make it ever more likely for what Delton's talking about to actually be adopted by central banks. Because in some way, their hand is going to be forced into a scenario where, in order to stay relevant, in a competition between different monetary systems in which negative externalities of the system as well as positive externalities of the system can be widely understood by the people who are using the dollars, central banks are just going to have to compete. And they're in a privileged position to do so. But I think it's like there's this interesting symbiosis in which I actually think the existence of this experimentation in the crypto space accelerates what Delton's doing from an institutional perspective.
Interesting. That's a good segue. Neil Cohn, you've got your hand up from Chia Networks, which is part of that Cambrian explosion.
Hey, all very interesting here. I've been involved in the carbon markets as you know, David, for 25 years. Everyone's saying put a price on carbon. There are prices on carbon. There's not one quality of carbon. We've gone through international negotiations to get to treaties that have been very thoughtfully negotiated to achieve goals. Now, not always effective, they're painful, but yet there are effective measures that are, sorry, it's very loud there. There are effective measures that are enabling us to really achieve real benefit in price of carbon. I see a lot of these other crypto efforts, we see Clean DAO get out there, went from almost $4,000 down to $36. How do we explain that? I mean, is this going to be causing damage to the viability of carbon markets and our ability to bring capital to these solutions? That's what scares me. We need to keep this credible. We need to stop the carbon casino. There are viable markets out there. We can create all sorts of alternatives, but I think we need to pay attention to all of the work that has been done by very credible organizations. And I believe that most credible companies and financial institutions realize that. So there's a lot of money out there in cryptocurrencies. I'm a big fan of decentralization, but I do also feel it's incredibly important to protect the work that's being done on climate and climate finance so that it is not, brought into some of the other, some of the negative effects that can come about.
Just to be clear, Neil is working with Chia Networks, which has a partnership with the World Bank to build a kind of as I understand, a warehouse or a clearinghouse of offsets and credits on the blockchain, and you've got a bunch of other cool initiatives going. Government of Costa Rica bringing their carbon assets online as well, and all well taken points, Neil. Does anybody want to weigh in? This is the thing that always comes in. Paula, I see your hand up. Whether I don't want to all go down the crypto route because that always takes up the all available time. But it does, as you said, Gregory, sort of prefigure a lot of the developments. Paula, what were you going to say?
Yeah, the only thing I would say, and this sounds kind of retrograde, and I love what Delton said. We have a social cost of carbon in the United States, and there's all kinds of, and I like what Greg says too, but I'm going to say something controversial, that this is not, in my opinion, the time to have a Cambrian explosion in experimentation. One thing we learned 15 years ago is that the general public has no idea what we're talking about, and neither do elected officials. And the more that this occurs, the more rarefied this conversation becomes, the harder it's going to be to get any kind of political process in place that would support anything that we're talking about. So, $100 a ton, not that I'll have 2 bottles of champagne. It's a personal triumph to me, but it's a big deal. It's not something to just discard and say, okay, we got that, but let's get something else. And, it's lonely in the vanguard, and I consider myself an inhabitant of the vanguard. I've been very lonely out there, but I've learned that you've got to have public support. And there's so much going on in the world today, and we just maybe need to take the disruption part a little slower and try to coalesce around what people can comprehend.
Well,
And, that would be my output.
Let me just engage everybody on that, Paula, because I think that's exactly right. Popular support. And what always comes up when we talk about the price of carbon is that it's effectively functions like a tax, and it raises prices. And there you get to what everybody always says, the yellow shirt phenomena in France, because energy prices and everything else is going up. And then popular support for decarbonization evaporates. I think if I take Delton's point, there's a different way to go that is rewarding the positive externalities as opposed to punishing the negative externalities. Do I have that right, Delton?
Yes, that's right. And
how does that play into a popular support strategy?
Well, if we want to get fundamental, we could look at human psychology. There are scientific experiments that have looked specifically at the role of carrots and sticks, or their effect on groups of people. At least 3 published studies, and they found conclusively that if you provide carrots first, then sticks, or any combination of carrots and sticks, you get a much better outcome in terms of social cooperation than you would with just sticks or just carrots. So that's at a human level. At the financial level, it makes sense, because as a business, you must make a profit. If you're in the black, if you're in the red, as a business, it means you're going broke. So you need to have some black on your balance sheet. Therefore, if you're applying taxes of any kind, it's red ink. So many businesses don't want the red ink because they're concerned about their profitability. So if you offer them some profitability, that's the complementary price, the reward for mitigated carbon, as well as your tax for carbon emissions. It's just generally easier buy-in for businesses, particularly those that are very difficult to decarbonize, shipping, aviation, and so on. And then finally, at the governmental level, governments are really strongly influenced, I think, by their stakeholders. So governments have another problem. They have a fiscal budget to worry about. Where does the money come from if they have to invest in climate adaptation and climate mitigation? Well, if we use a monetary approach, we can take the cost of mitigation, not all of it, but a big piece of it, off their fiscal budget. Therefore, there is a possibility, Paula and others, that governments at the international level could coalesce around such a policy, because they'll see that it takes the cost off their balance sheet. Therefore, an agreement around a reward could actually happen much more quickly than it takes to produce an agreement around taxes and austerity. So that's an idea for people to discuss.
Yeah, it's the top of the hour, everybody, and we know some people have to jump, and that's fine, obviously, but we're going to stick around and keep the conversation going. So if you can stick around, please do so, and we'll leave the room open for another 15 or 20 minutes. The one thing I do want to get to, and I know I saw somebody from 1 Acre Farm and a few other comments in the chat, which I just had a chance to glance through. How does this go to ground for real projects, real farmers, real forest preservation, real even technology solutions? If anybody wants to pop up and say that, that'd be great. And while we're waiting for that, and Youngbo, I'll turn to you in a minute. You can actually help lead the sort of after party as you do, which I enjoy. Let's just give everybody a quick chance for a final thought. Edwin, Paula, Emmanuel, Gregory, and then and Delton as well, if you have one before everybody peels off.
Well, I'll jump in. I'll just say as a final thought, back to the beginning, these markets are imperfect, but they should link up. If they linked up, there'd be a tremendous impact on the people on the ground. I think it was someone earlier said, farmers wouldn't be getting $30 a ton, they'd potentially getting 75 or 90. That does change the equation. You can manage the quality of the projects pretty well already. I think there's an exaggeration about the projects being fraudulent from an environmental point of view. I think that's an exaggeration. But that being said, it takes political will to do any kind of thing that's not happening now. So if I go back to my original, is people just need to do things. That's the most important step right now, is to do more of whatever we're doing that makes sense.
Edwin, Emmanuel?
I mean, I think one of the most encouraging things is that corporations generally are recognizing now that this is a liability, right? I think sort of very crudely, you could think about the sort of carbon problem as moving from a sort of marketing HR type department in the corporation to being treasury. So we can argue about what the right price should be, but generally they are recognizing that it is a real liability and they are making conscious choices about abatement projects. And that's a huge step forward, I think, in terms of what's going on. And I think that will enable all sorts of things. I think there will also be, you know, to Paula's point, we shouldn't wait for perfect here. There will be different markets and different standards of verification, and those things will trade for different prices. And that's okay. That's okay, right? Different people will have, you know, ahead of legislation, they will have a different comfort point with the degree and quality of sequestration and verification and everything else that goes with that. I don't think it has to be one solution fits all for this. The important thing is that it's happening now.
Thank you. Emmanuel?
Yeah, I think it's encouraging. It's a good start. But let's not think this is going to solve everything, right? So there's this great article by Bob Eccles in the Harvard Business Review, I think, of October, where he basically makes the point of if ExxonMobil had to pay $100 a ton for all the Scope 1 and Scope 2 emissions just of ExxonMobil, that would wipe out the entire earnings for 1 year, right? So, and if you had Scope 3, that's the earnings of ExxonMobil over 7 years. So getting to a mechanism that is completely aligned and works and will basically shut down ExxonMobil in a few months, not realistic. So that's not going to happen. But it's really encouraging because, again, it's this carbon price, especially in Europe, is helping some industries to transition faster. But again, that won't be enough. Institutions aligning and green stimulus or all this is inflationary. So you need to combine this with breakthrough technologies that will bring a deflationary impact to this, because otherwise the society at large will never accept the transition. If it's inflationary, if you still have the green premium forever, forget it. So, and the last point is carbon is one component in ESG where you probably have to consider another 20 or 25. So let's continue that thing, but that's not enough to measure really the transition we need to make as a society and that many companies need to make.
Excellent. Delton?
Yes, so I just wanted to make a very high-level comment about where we are today. With the $100 breakthrough in the carbon price in the European Union, maybe this is metaphorical for a historical event. And I make the comparison with the Wright brothers' first man-powered flight. So in that context, if we just took off with our little airplane, what's that airplane going to look like in another 80 or 100 years? My guess, it's going to look very different, because in 80 or 100 years' time, our technologies will be far superior than what we have today. But we have a problem with propulsion. Metaphorically, we need more energy, more fuel for our airplane, and the fuel is money. So we have a 3 to 6 trillion roughly climate finance gap. This is also the green premium that everyone's discussing. So if we can figure out how to get that 3 to 6 trillion to the right people, the right places at the right times, targeted finance, scalable, then our little airplane can become something quite amazing. And I think people like Gregory Landua and many other people like him are just falling over themselves to innovate, find solutions for what will be a very decentralized gathering of information across hundreds or thousands of different types of mitigation. And we need a decentralized system to pull that information back, but we also need long-term reliable carbon pricing. So you know that I'm promoting the global carbon reward, so I won't repeat that, but maybe we should think about the central bank role in this case for the long term. Thanks.
Gregory, that's a perfect toss to you, and you get the last official word, and then Yangbo, why don't you come in after Gregory?
Amazing. Well, first off, super grateful to have gotten to this very stimulating conversation. I think, out collaborate the competition. There's going to be this. One thing is true about all of this, and that's that we're all in this together, and it's going to take a lot of different approaches from the grassroots up, and engagement from the top down, strategy, institutional support, innovation. And I think that's what's happening, actually. I have a huge amount of hope, actually, that we have kind of crossed the sort of, metaphorical Rubicon here. And now the world is different. And now there is enough of a price signal for carbon that things are really going to start to transform in pretty radical ways. And, as Emmanuel said, it has to be beyond carbon as well. So here we go. Let's do it.
Yeah, and just to that point, Gregory, you talk about ecosystem services. Once you tokenize a carbon asset, you can layer, these outcomes on it, the clean water outcome, the climate adaptation outcome, and these become additional revenue streams that people can purchase, whether it's the same person or, different people coming in for different pieces. And with that, there have been a bunch of questions about nature-based solutions, and in particular about how in all of this, blockchain solutions, especially, how do we make sure that the land stewards, the people doing the biodiversity, and the indigenous communities, Black-owned, land tenure. How do we protect all of these people who are actually doing the hard work, and make sure that, all of this money that's, piling into carbon markets, and, whether voluntary or other schemes, how do we make sure that that's actually reaching the people on the ground? Because there are middlemen, there are corrupt governments that siphon off some of this funding. How do we make sure that the right people are being rewarded for, the work that they're doing?
Let's leave that as an open question for everybody to ponder. And Yangbo, you've had your hand up for a while, but you've got to unmute yourself, I think.
Yep, perfect. Thanks for the insights, everyone. And actually, thank you for your intervention, Paula, about this part about the Cambrian explosion, since what really occurred to me in discussions several years back in Washington around time of World Bank IMF meetings and after were that you tend to lose people whenever you talk about things like tokens and whatnot, that they convey a sense of esoterica still to quite many, but rather if you like to engage those who have net zero exposure to any of that, and whoever realizes, well, especially farmers and others, if you talk cooperatives with them, it's something that they readily understand. And what are really tokenized assets, then a simpler way, then a much easier way to have a mass cooperative, if you think about it functionally from an organizational standpoint. So that's one. And secondly, I like to draw attention to some of the pushback that's received from this not going to happen attitude that many have brought up. And if Richard or PJ or anyone who voiced those, if they're still on the line, they can jump in as well. What would be really compelling is what would be some attitudinal shifts that would be necessary around these issues, as in viewing carbon things. Of course, we went over going with carrots first, and then the sticks come after that once there are enough carrots around. But there's like further perspectives on like what shifts in attitude would be necessary, what would be best advised. So either the panelists here or open up the entire floor. Anyone would like to chime in on this?
I just will say that the Ministry for the Future actually is exactly about that exact topic, and attitudes shift in the course of that book. So that's an interesting data point. But I do think that this question of popular support is key, and I've always thought that the carbon pricing driving, as you said, Gregory and others, projects on the ground and getting rewarded for all of the things that all have all kinds of co-benefits, as Amy pointed out, is one way to generate support. But making people pay less for stuff they need and putting money in their pockets is obviously good as well. And Delton is trying to popularize, I think, something along those lines. So I'm going to shut myself up now. If anybody wants to pop in, either speakers or others, we have a few more minutes, and we'll leave the room open. This is kind of the after party or the happy hour. No BYOB though. So
well, I just can't resist. I mean, answering Amy's the open question and to Young Bo, he's exactly right. It isn't what you call it, whether you call it a token or you talk about car. People have to understand it, one, and believe in it, two, and it has to be invisible to them. It has to be something they actually don't have to do, that is being done around them with their authorization and their support. People trade stocks, they understand stocks, they have pension funds. I know a lot of people who are school teachers who don't really, one, follow their pension funds, like having a pension, and leave it to their pension managers to invest. And the more they hear about green investment, then they say, well, please invest more in green. But they're not in there working their money every single day. And most people are not. Only the 1% works their money every day. So you need some intermediary bodies. And to the question of how does it get down to the ground, you've got to trust the intermediary bodies, and they have to have some authorization from the public. So consequently, I think, again, not to rain on the experiment parade, but at every stage of this innovation, we will have to bring a kind of common parlance along. Otherwise, it's not that I don't think it will happen. I think it will be very, very difficult to get it within the time frame we have available, which is 5 or 10 years.
Delton, you seem to have something to add.
I was just thinking about the time that Paula was saying. We only have 5 to 10 years I think the target is to halve emissions, roughly. That seems to be a common goal. The EU's 55 by 2030, 55% reduction. So, these are pretty demanding goals. If you look at it globally, it looks even more demanding. And so here's a very good philosophical question, actually. It really comes to philosophy. Should we stick with our current policy toolkit, which we're familiar with now, and hope it'll work? Or should we invest in other options and opportunities in case we need them? And I think we should do the latter. We should be innovating as much as possible. Of course, you can't really explain all this to the general public. That's impossible. I understand that point. But sometimes big decisions, policy options can be introduced from a high level with relatively small political public debate. I'll give you an example. The example is the British government, the UK government, handed a new mandate to the Bank of England last year to target net zero. There was no discussion that I heard of before that. It was just suddenly announced and written in a letter, and presto, we had it. I think that's a world first. So these sorts of monetary changes can happen quite quickly and with relatively small political debate, which might appear strange. But my own opinion, my interpretation is that monetary policies surprisingly do happen behind the scenes. Take Bretton Woods, for example, the Nixon shock and the removal of the gold window. It happened pretty quick. Even the European Union with the euro, there's 27 nations on a common currency. That took quite a while to organize, but still they managed it. So I think we should keep an open mind. So thanks.
Yeah, as long as there's consensus behind all of that.
There's a few.
And I
There's a
think that just to reinforce what Datson was just saying, that's the difference between this energy transition or this industrial revolution we are facing, because it's going to be about better, cheaper, faster, as always, but this time greener is also an attribute, and that's what's good about it, because there is a consciousness of governments and more people. Not enough. That better, cheaper, faster is not enough. You need better, cheaper, faster, and greener also.
Sid, I see you have your hand up. As Amy said, there's no need to raise your hand, but do jump in.
Yeah, I wanted to address a few of the comments and Amy's question, which I guess came out of at least one comment. In terms of the smallholders and farmers, what we focus on with our fund is investing in conservation-friendly enterprises that generate carbon benefits in Latin America. Not every investment will generate carbon benefits, but as we've seen the pricing change and prices increase for carbon, it's allowed us to look at a broader range of types of investments. Now we can look even at, and typically this requires aggregation, of course, which is something I learned managing IFC carbon funds. If you can aggregate carbon reduction, say from several wind farms, looking at the energy sector, it's easier. And all you need is some, institution or mechanism that enables aggregation. So with farmers, we might be an association, but we can now look at, 5,000, 2,000 hectare farms and incorporate carbon pricing into an investment, which is really more a transition to regenerative agriculture model that is both, in pasture and agroforestry. So you're looking not only at carbon in the nature-based solutions sector, you have to look at your partners or, quote, beneficiaries, if you will. And I think we all learned, I've worked in carbon as long as Neil, I've known Neil since the 90s. But we've all learned that, yes, in the early 2000s and back in the day, sellers would get screwed on price, but it was just, that's the way the price was. Now there are, different ways of structuring investments where you can have upside sharing, and that sometimes means ensuring your investor gets a share, the intermediary that's aggregating, that's doing all the monitoring and applying, even if some of the blockchain or the automation, if you will, to make it easier to aggregate. Because a little farmer that's producing coffee, and we're now working on this, how to get even the smallest producers into the carbon market, because they can't access it. They don't have the tools. It's too expensive with the documentation. I really liked what Gregory was talking about with the alternative, mechanisms for, verification, if you will. And we're exploring that now, because the smallest producers are the ones that are sitting in this stuff where the biodiversity is. And we have to keep this functioning. If we just have carbon, but none of this, the planet's not going to continue to operate. So there are tools. I think if the price of carbon goes higher, and investors would become more open to nature-based solutions, then there is an opportunity to work with, small producers. And even I know, people, we've been trying to address this concern about indigenous peoples as well. They are really the best landowner or land stewards in the planet. And that's what our goal is, to really promote stewardship and value ecosystem services, value biodiversity, if it's in the form of biodiversity credits, great, or, invest in user fees, access fees, whatever it might be that fits with a local environment. But it's not easy, Amy and others who ask, I could tell you that. And if anybody has solutions, we'd love to chat with you.
Sid, what is your fund?
It's, well, sometimes you call it Jaguar Legacy Fund, but people confuse it with a philanthropic vehicle. So sometimes we call it Jaguar Corridor Investment Fund. And it's really focused on conservation friendly investing, which is, you know, some of the coffee, cocoa, agroforestry, tourism, sort of the usual suspects that we've all invested in the past.
Great, thank you. And I love your background.
Can I just, I was just about to jump and thank everyone, but on Sid's point, one, the point about aggregation is critical. And two, the other issue to tie back to Delton, I was just reminded that when we were running CCX, Chicago Climate Exchange, we had a project in Kerala, and individual households substituted, you know, fuel in their home heating devices, their home cooking devices, the infamous cook stoves. They were the reductions were measured and verified, and the homeowner took the certificate of verification to the local bank, Delton, who paid them cash right then and there. So the local bank took the risk and did get a small premium once those certificates were made whole by a third party, but they took the immediate risk, and we had hundreds and hundreds of people participating. I can send you the pictures of all the villagers coming, and they were not cheated. You know, they got a good price, they got a premium, and the aggregators could sell those aggregated credits on the Chicago Climate Exchange. So we also had a linkage going, really at the very grassroots. So it can be done, but it really basically depends on credibility and acceptance of the local people. And that's where you need, you know, back to the issue of would there be consensus on some of this? You know, I think it can be done, but I'll send you, Delton, that story because it's a bit in your line.
Thanks, Paula.
Before Paula drops off, can I share a fun conservation related fact about her? Paula, in her earlier career, traveled on the Calypso with Jacques Cousteau and made documentaries about a lot of that, which I think is so cool.
Well,
Paula,
we can have
thank you.
I'll come back
Thank you.
another time and talk about that for an hour. But anyway, thank you all for inviting me, and to the fellow panelists. It was a pleasure and honor to be with you all, and certainly this great audience. Thanks again. Bye-bye.
Thank you.
Thanks, Paula.
Thank you, and thanks to everybody. And we don't have to close, but it's also might be a good time to let folks go back and do all this good work that we've talked about. We're going to stay on the beat, Amy in particular, as our lead on our climate, but we're trying to be all over carbon pricing as well as catalytic capital for climate and other threads that you have that ImpactAlpha spin on them. I do want to remind you again, 2 weeks from today, Tuesday, February 22nd at 10 a.m. Pacific, 1 Eastern, a whole policy roundup. That should be interesting. And then we'll get you the rest of the calendar for the calls from there. So
And please continue to send us your thoughts where you're seeing carbon pricing show up in the market or in your work, and you know, any interesting models that you're coming by or that you're creating.
Yeah.
so with
David,
that, thanks to everybody, and let's and see you next time.
Yeah. Thank you all.
Thanks, Amy. Thanks, David.
Bye-bye.
Bye-bye.
David, was this recorded? Is this going to be shared? Because I missed a good chunk of it at the beginning.
Yes, we'll put it out on Friday in the brief, and then we'll also post the video on YouTube. And the link will be in the brief.
Excellent. Thank you so much.
Thank you.
Yeah. And also, David, I wonder if you have spoken to Bobby Fishkin lately, who's a part of this channel.
Yeah, I love Bobby.
Yeah, because I've been in pretty close correspondence with him and one of his collaborators, Claudia Brenner, also in California, about how to really take an integrated approach to disaster risk reductions, so climate hazard management and all of that. And
I know forest fire management and whatnot. Yes, that's
yeah, exactly. And actually, he's intent on getting a series of events, maybe a hackathon or anything started from the International Day of Forests, World Water Day, a joint event around then, and then onwards through Earth Day, through COP15 on biodiversity, up to World Environment Day. So he has quite a lot.
I've been sort of lurking on those threads, so I've been a little bit knowledgeable, and I'll reconnect, and all that is great stuff. Okay, I was about to click off, but
definitely do some follow on with this carbon pricing. It's
very big. All these issues will be brooded about for a while, but I think it's really going to be end up being pretty transformative. Okay, with that, I am going to log off here. Thank you, everybody. You're the hardcore. Bye bye.